So the next project we'll take a look at is Ethereum. Ethereum is essentially second to Bitcoin in the current Bitcoin crypto market. Ethereum is the second in command, the second in place in terms of market cap, and overall command over the other coins in terms of overall growth. So Ethereum is a decentralized blockchain network that has implemented and developed the concept of smart contracts. Smart contracts are computer programs that automatically fulfill encoded agreements between parties across the internet. So here's Ethereum's website. If you haven't gone to it, I encourage you to check it out. It's really well made and it's very informative as well. The market cap of Ethereum 3 months ago was about $446 billion. And at the time of producing this video, the market cap is currently $551.1 billion. So once again, this is a significant amount of growth in just 3 months. Little over $100 billion have been added to Ethereum investments and have essentially been added into Ethereum's ecosystem in circulation. We also see that Ethereum has a volume of about $26 billion, about $26.5 billion in a 24-hour time period. We also see the circulating supply is about 118.5 million ETH. This is the amount available to people to purchase on the public. Now, Ethereum's max supply has not yet been confirmed or identified, and this is due to the project leaders. Essentially, there hasn't been a need for a maximum supply or a fixed supply for Ethereum, because in their vision, Ethereum's purpose is not necessarily a store of value. It's more towards building a decentralized computing network, and for their purposes, having a max supply is not necessary. Now, we also see the total supply, in this case, coincide with the circulating supply at the time. So the total supply that is available and has been created of ETH is still 118.5 million ETH, equivalent to the circulating supply. This is the amount that's available for purchase and sale. They're both equivalent to each other. We also, because of Ethereum's max supply and the Ethereum Foundation stance on having a fixed supply, we can consider Ethereum to be an unlimited token supply, or have an unlimited token supply. In theory, if more and more Ethereum will be added to the network over time. Now, Ethereum's consensus model is proof of work, meaning that proof of work or crypto mining is used to process transactions. Now, this is currently in place until the ETH 2.0 update finalizes, where the network will transition to a proof of stake model. And you could read more about that on the Ethereum website as well. We can also consider Ethereum at the time of recording to be a store of value or a payment coin, because Ethereum or Ether, when you buy ETH, $ETH, you're actually buying Ether, which is the currency used on the Ethereum network. So at the time, ETH or Ether is considered a store of value or a payment coin on the Ethereum network. Some associated projects are Ethereum Classic, which is an old version or an old fork of Ethereum. Another associated project is Uniswap, which is a decentralized exchange that operates on the Ethereum network. And also Polygon or $Matic, which is a scaling solution and a layer 2 scaling solution, layer 2 blockchain that operates alongside with Ethereum. Ethereum's lease date was on 2015. That was their official launch. Their founding members, the founding members of the Ethereum project are Vitalik Buterin, Mihai Alisi, Anthony DeLorio, Amir Shetrik, Charles Hoskinson, Gavin Wood, Jeffrey Wilk, and Joseph Lublin. If you'd like to find more about these, be sure to check out our Ethereum lesson in our free intro section. And we can also find Ethereum's white paper on their website. It is very easily found. So if you're interested in Ethereum, if you're interested in how it works, be sure to check out Ethereum's white paper as well. It's very well written. And finally, we'll take a look at their update schedule. So the ETH 2.0 updates are easily available on the website of Ethereum. And essentially, the ETH 2.0 update is in a set of individual upgrades that will launch at different times. We see the Beacon Chain, Phase 0, that's gone live as of December 1st, 2020. The Merge, which is essentially the merger between the main network and this new chain, this new blockchain, the Beacon Chain, and that's expected in late 2021, early 2022. And that's really the main update that everyone's looking for. This is the update that should, in theory, lower the transaction costs on Ethereum and the overall congestion. And we also see shard chains. This is an update that essentially will help Ethereum continue to scale into the future. And that's expected in 2022. So here's some visualizations from the Ethereum website. This is particularly focusing on the Beacon Chain. So the Beacon Chain doesn't change anything about the Ethereum that we know, love, and use every day. It will essentially act as a coordinator to the network. It will just coordinate the existing information on the blockchain and merge it onto a new chain that will essentially help overall infrastructure, help improve overall infrastructure, transaction speed, and the rate of adding new information to the blockchain. It will introduce proof of stake to the Ethereum ecosystem, and you might know this as Phase 0 on technical roadmaps. Now, as far as the merger, so eventually the current Ethereum mainnet will merge with the Beacon Chain, and essentially this will mark the end of proof of work for Ethereum and the full transition to proof of stake. This essentially means that this will mark the end of crypto mining, or particularly mining Ethereum. Bitcoin will continue to be mineable as they have no plans, that project has no plans to switch over to a proof of stake model. Ethereum is special in that it does have plans to end their crypto mining protocols and move over to proof of stake, or having staking pools where users can stake their coins as opposed to mining coins. This is planned to precede the rollout of shard chain. So this is essentially the next step, or one of the next main steps in the Ethereum 2.0 rollout. And this was formerly referred to as the docking, essentially docking the old chain with the new chain. Now finally, we have shard chains. So sharding is a multi-phase upgrade to improve Ethereum scalability and capacity. Shard chains spread the network's load across 64 new chains. So essentially it's going to have multiple chains within a blockchain to allow Ethereum to run much more functionable and to be much more efficient when adding data and new blocks to the chain. They'll make it easier to run a node by keeping hardware requirements low, and the upgrade is planned to follow the merger of the mainnet with the Beacon Chain. So this will hopefully be sometime in 2022. We will have to stay tuned to see if there are any delays to the updates, which happens with projects of this scale. This really hasn't been done before, especially with how many transactions and how much usage Ethereum sees today. So taking a look at Ethereum's technical charts, taking a look at its price charts. So over the course of its existence, Ethereum has seen rapid, rather dramatic growth. We see in 2015, it really started about 75 cents per Ethereum when it was released, and over time increased to highs of nearly $1,500 in 2017, overall falling to rather low levels, maybe around $100, give or take, from 2018 to 2020. And then finally we see a dramatic increase going into 2020 and into 2021. And following this, we also see familiar patterns and familiar shapes and peaks and valleys as seen in Ethereum's market cap. So essentially, the market cap coincides with Ethereum's price schedule, whereas price goes up, the market cap will typically follow. And if market cap goes up, price will typically follow. More money invested into its ecosystem, the more value each coin will have. Taking a look at Ethereum, particularly in the month of October and November, we see generally Ethereum holding strong above this $4,000 level. This is a prized price level for many people. It's a visual thing. It could be a psychological level. But while there has been extreme highs towards the beginning of November, coinciding with Bitcoin's performance and Bitcoin reaching new all-time highs, Ethereum has rebounded very well, reaching 4,700 in recent times, whereas Bitcoin has struggled to recapture those mid to high 60,000 price levels. And here we see another chart of Ethereum's market cap, essentially following the same pattern once again throughout the month of October and November. So moving on to Ethereum's white paper. So what's interesting here is we see the intent of Ethereum, and particularly the philosophy and the goal of what was the purpose behind the creation of such a network, where the writer essentially said the intent of Ethereum is to create an alternative protocol for building decentralized applications, providing a different set of trade-offs that we believe will be very useful for a large class of decentralized applications, with a particular emphasis on situations where rapid development time, security for small and rarely used applications, and the ability of different applications to very efficiently interact are important. And essentially, the writer goes into detailing the foundation layer, the layer 0, essentially the base layer of Ethereum, which is a blockchain with a built-in Turing-complete programming language, allowing anybody to write smart contracts and decentralized applications where they can then create their own arbitrary rules for ownership, transaction formats, and state transition functions. Now, essentially, developers and users have followed through with this goal, this visionary goal in 2015, where we now have multiple lending and borrowing platforms. We have decentralized exchanges. We have decentralized gaming, full-on games running on Ethereum. There's NFTs, the entire NFT ecosystems, and much more, all running based on this visionary goal. Now, looking at the right side, we also see examples of Ethereum mining, where we see similar structure following upon the groundwork laid by Bitcoin, where we have consecutive blocks, block 5624, block 5625, and consecutive transaction hashes, essentially pointing to the block before it.